The big five, the big five. So why do I call them the big five? Well, this is just a breakdown of the market capitalizations of these companies. So at the top of the list is Apple, largest company by market value in the world at about $2.8 trillion. Next being Microsoft, not far behind at $2.4 trillion. The smallest being Meta Platforms, Facebook, Instagram, which is just under $800 billion. But combined, these five companies alone account for 9.1, almost $9.1 trillion of market value. So five very important companies. And just to put that into perspective, if you look at the S&P 500, the market capitalization, total market value of the entire S&P 500, which includes these companies, is about 37-40 billion dollars. So 9 trillion or sorry, 37 to 40 trillion dollars. So 9 trillion out of 40, you're looking at, I don't know, what, about 23% or so of the S&P 500. But if you look at the NASDAQ exchange, the very tech heavy NASDAQ exchange, the market value on that total is, I believe, about 15. No, sorry, it's about 25 trillion is what I think it is. So I mean, you're roughly around, like, what, 35%. You can check that. You guys can check that for me, but I think we're roughly around 25 trillion for the Nasdaq. So these companies, small in number, large in size, are obviously extremely influential when it comes to the market. When you're looking at, say, price changes for the S&P 500 or year-to-date returns, uh, a large portion of that really just comes down to these five companies and how they're doing. Looking at the stock price performance of these companies year to date, they've all performed very well. Meta is far in the lead of this group. So year to date, up 146%, followed by a distant second with Amazon, up 61%. This can be a little bit misleading to an extent. Meta and Amazon, although they are the top performers year to date, these are the companies that have actually been the most challenged relative to the others over the last couple of years here. So if we go back and we look at a 3-year return, and of course we like to look at a longer term return as opposed to just a collection of months, this situation reverses. Meta and Amazon are actually the two bottom performers over this period of time. The leader is Google, or Alphabet rather, which is up about 80% over the last 3 years. And then fairly close seconds would be Apple and Microsoft at 67 and 61% each. So good, solid market leading returns generally from these stocks. They all took a hit over the past in 2022 with the rest of the market, but they were generally more stable than what we saw from a lot of, like, the mid to large cap technology companies that were trading at higher valuations. But anyways, let's walk through. All these companies have released the results. So I've just put together some summary tables to see how they performed. We'll start with Apple here, which is the biggest company. It reported quarterly revenue of $94.8 billion, and earnings per share of $1.52. So revenue was actually down year over year for the company. It was down 2.5%. Earnings per share were flat year over year, but the company did beat analyst consensus estimates for both revenue and EPS, outperforming the revenue estimate by 1.6% and the earnings per share estimate by 5.6%. Next, I'll take a look at Microsoft. Microsoft reported quarterly revenue of $56.2 billion and earnings per share of $2.69. So year over year growth for Microsoft, that grew its revenue 8.3% compared to 2022. Earnings per share growth of 20.6%. So this is fairly impressive on the earnings side, I thought, given that 2023 was expected to be a year of far more muted growth for a lot of these companies. So I was quite impressed. That was after 3 years of historic growth from the company as well. Relative to analyst estimates, it beat on both metrics, beating revenue by 1.4%, beating earnings per share by 5.9%. Now, Microsoft has been, I would say, in the news a lot recently due largely to its investment in OpenAI, which is the developer and owner of ChatGPT. So Microsoft has been integrating a lot of these AI technologies into its software, its suite of software services. One of those things being Bing, creating Bing Chat, which is essentially combining ChatGPT with its Bing search engine. Next up is Alphabet, reporting quarterly revenue of $74.6 billion and earnings per share of $1.44. So the company outperformed, or relative to the previous year, the company grew its revenue by 7%. It grew its earnings per share again by an impressive 19%. And it also outperformed analyst estimates on both revenue and earnings. So 2.5% outperformance on revenue, 9.1% outperformance on earnings. So Alphabet's an interesting story, also been in the news a lot lately because Alphabet has been seen historically as potentially the strongest AI company in the world. But now has been more or less put back on its heels, or so a lot of investors thought, with the release of ChatGPT. A lot of people were thinking, can this technology be somehow adapted into search engines and start to eat away Google's market share, which is absolutely dominant market share in search technology, which is one of the highest margin businesses in the world. So for many years, competitors have been eyeing Alphabet's dominance of the search market. Microsoft, with their new Bing Chat, has really tried to take a run at Google to try and steal away some of that market share. But as of the last quarter, it doesn't really seem that Google is really losing much of its space with internet users. I, for one, have found when Bing came out, when Bing Chat came out, I immediately transitioned over that because I was really interested in it. But I found myself really gravitating back to Google. So we'll see. Alphabet as well, coming out with a lot of AI technology. This battle is not over yet, so lots gonna happen over the next 1 to 2 years. But the company also outperformed analyst estimates as well. So 2.5% outperformance on revenue and 9.1% outperformance on earnings per share. And the next is Amazon, reporting revenue of 134.4 billion, earnings per share of 63 cents. So 11% year over year growth in revenue. Relative earnings relative to last year, they actually reported a net loss last year of 20 cents per share. So transition from a net loss to positive earnings. That's a good sign. Big outperformance on earnings per share relative to analyst estimates, and a 2.1% outperformance on revenue. Now, Amazon's an interesting company. We're going to look into future expectations as well as valuation in a couple more slides. But Amazon, there's really two main parts to the business, the way that we see it. There is the Amazon.com, which is what most people know of as being Amazon. That's their online store and delivery service. But the biggest part of the business is actually Amazon AWS, which is their cloud computing business. And this is really where nearly all of the money is made in terms of profitability from the company. So they have a market leading position in cloud right now, have not really been growing their market share, whereas the two other top competitors, which happen to be Microsoft and Google, have been growing their market share in that space over the last couple of years. So Amazon has not been one of our favorite of the big five, but good numbers in the last quarter. And then finally, there's Meta, revenue of 32 billion, earnings per share of $3.23. So that's year over year growth of 11% in revenue and 30% in earnings per share. And then relative to analyst estimates, good outperformance on revenue of 3.6% and a very strong outperformance on earnings, exceeding analyst consensus by 12.5%. So Meta, they've had a couple of good quarters here, but they've had a tough run before the last couple of quarters. In 2022. They had some poor performance. The stock was probably the most volatile of the big five. I remember Jim Cramer was crying one day on his show about the stock going down and him saying that he liked it. But then it went down, so he was changing his mind. I don't know if he changed his mind again and he likes it again, but there's good momentum taking place in the company right now. They have recently come out with their new competitor to Twitter, which is Threads. We did do a segment on that. We'll probably update that at some point because it broke records in terms of acquiring users in the first couple of days or first week. But of course, what really matters is will they be able to maintain that momentum against Twitter? So those are the results of the companies. But I also wanted to just take a look at what the analyst consensus was for 2024 going into next year, growth rates, and then valuation. So Amazon, you know, in terms of analyst expectations, they're expected to have the most growth in earnings going into 2024, 44% growth. They're also the most expensive of the companies on a valuation basis, about 46, 50 times earnings. Now, again, you have to look at that growth figure from the perspective of they've had a couple of weaker years as well, right? So the same can be said of Meta, 25% expected growth going into next year, and actually the lowest valuation, price to earnings of 18%. But, again, Amazon and Meta have not generally had the same consistency of financial performance and growth that the other three have. Microsoft, good growth in the next year, Alphabet, good growth in the next year, both trading at what we consider to be reasonable valuations. There's Apple expected to grow about 9%. And it's trading at about a 27 PE. Apple's another one. I mean, highly successful company, but growth can really ebb and flow, as they really are at the core more of a consumer products business than a software business. So obviously their growth is going to coincide with the release of new products and that cycle. But that's the big five. So if you guys have any comments on that or anything you want to
I'm curious what Jim
share.
Cramer's thinking now. That is,
Yeah, well, because we're like, oh, so what was the story? This was like what, 6 months ago?
I actually
Um,
looked up the date.
mhm.
So I posted the individual segment on November 4th, and that week was actually the lowest closing week of the year.
Mhm.
So he timed it about perfectly at the bottom, that segment where he was regretting his decision, and it's about up $200. It was about $90 when we released that,
Yeah,
and now it's
and I
300.
mean, we kind of had a good laugh because the
Mhm.
situation was he was a big proponent of Meta. He was talking very positively about it on his show as the stock was going down. Um, he was saying, no, it's still a good company. Then they had a really bad quarter and the stock took a big dive in like a single day. And then he's, on TV crying basically and saying, something like, I don't know, they lied to me or they misled us. And we
yep.
kind of had a good laugh. It's like, well, first of all, this is the stock market. Like, you don't need to cry on TV about it. Maybe you made a mistake. Maybe you didn't. Maybe, I mean, companies can have bad quarters, as we've seen here. Meta had a lot of volatility. Now it's doing well. It's pulled back up, but yeah, I don't really watch Kramer's show. I don't know a lot about him. I have nothing necessarily against him, but I would certainly be interested to hear, like, do you now like Meta? Did you sell it or tell people to sell it then at that point when you're crying and now you're laughing? Or now you're you know happy about the company? It's, yeah, be interesting to know.